Welcome to another BAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over BAR Area 3. This is Section C7, an application topic. Calculate expenditures to be recognized under the modified accrual basis of accounting, including paid from available fund financial resources, for state and local governments, and prepare journal entries. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Just a quick reminder about who we are at SuperfastCPA. One of our main strategies is using the questions to learn the material. And if you want to learn more and more of our strategies, make sure you check out our free 1-hour webinar on SuperfastCPA.com. In that free 1-hour webinar, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then after that, you're going to want to learn more, so make sure you also check out the pro course or check out our study materials, like our additional study materials, such as the mini quizzes and the audio notes and the review notes, or of course, the total bundle, which includes everything. And one thing that is included as a part of SuperfastCPA, if you become a pro member right now, and in the future, if you purchase the supplemental study materials, is the full versions of these videos. So in today's YouTube video, we're only going to be going over 5 questions, but if you become a part of SuperfastCPA, you can get access to the 10-question versions of these videos so that you can get a little bit more help and a little bit more understanding. So make sure you check out the webinar and everything else after you watch this. And with that, let's dive into the first question for this video. All right, here we are at question 1. One thing I always like to point out as a good strategy is reading the last sentence of the question first. So let's go ahead and do that here. What amount should the general fund recognize as expenditures under the modified accrual basis of accounting? So now we know we're dealing with expenditures. Of course, you know that about this video, but imagine you were at the test on exam day. You have no idea what you're going to be seeing, so getting that context is really helpful. Let's go up to the top. A city's general fund had the following transactions during the year. They incurred $487,000 of salaries for fire department employees, purchased and received police equipment costing $64,500, made $21,600 of payments under a short-term lease, transferred $92,000 to the debt service fund, and purchased $115,000 of short-term investments using cash. So again, what are they going to recognize as expenditures in the general fund? If you don't really understand expenditures yet, or if you just don't really know what's going on here, that's okay. We are using these questions to learn. So let's go ahead and go to the explanation to start learning about this. All right, here we are. The answer is B, $573,100. That's how much is going to be recognized as an expenditure. So let's go through this. Expenditures, this is explaining what expenditures are, by the way. Expenditures are decreases in a governmental fund's net financial resources other than through interfund transfers. So basically, if the governmental fund's net financial resources decreases, unless it was an interfund transfer, it's probably going to be counted as an expenditure. The salaries, equipment purchase, and short-term lease payments are expenditures because they represent uses of the general fund's financial resources. So the salaries, the police equipment, the short-term lease payments, those all together equal $573,100. So the fire department salaries, the police equipment, the short-term lease payments, all of that together equals the total expenditures of, again, $573,100. The $92,000 of interfund transfer is reported as an other financing use rather than an expenditure. So again, interfund stuff, like a transfer to a debt service fund, that's not going to be an expenditure. And purchasing short-term investments is also not an expenditure because the city merely exchanged one financial asset, cash, for another financial asset. When you see them buying investments with cash, it usually isn't counted as an expenditure because the resources didn't go down. They lost cash, but then they gained a short-term investment. So nothing really changed. Whereas with expenditures, again, it's specifically a decrease in the fund's net financial resources. So we learned a little bit there. Now let's go to the next question. Okay, here we are at question 2. What amount should the general fund recognize as expenditures for supplies and services during the current year? Let's go up to the top. A city's general fund paid $638,400 to vendors during the current year for supplies and services. Accounts payable related to these costs was $42,700 at the beginning of the year and $57,900 at the end of the year. The city had approved an appropriation of $720,000 for supplies and services. At year end, the general fund also had $28,500 of outstanding encumbrances for goods that had been ordered but not yet received. So again, what amount of general fund expenditures are going to be recognized for supplies and services? Based on what we learned in the first question, maybe you have an idea. If not, that's okay. Again, we are learning the different pieces that we need to know. So let's go ahead and go to the explanation for this question. Okay, here we are at the answer, D, $653,600. Let's go through this. Under the modified accrual basis, which is again what we're talking about throughout pretty much this whole video, expenditures for ordinary supplies and services are generally recognized when the related fund liability is incurred. Cash payments must therefore be adjusted for the change in accounts payable. So the cash paid to the vendors was $638,400. Then you add the ending accounts payable of $57,900 and you subtract the beginning accounts payable of $42,700. And the reason for that is because that beginning accounts payable was paid by the cash that was paid to the vendors. So there's no longer that beginning accounts payable because that would have been covered. And then you have the cash, and then you add the ending accounts payable. Anyway, with all that together, it ends with a current year expenditure of $653,600. Kind of similar to how you would calculate cost of goods sold or things like that. A very similar formula to how you might see a lot of different things calculated. You take the current expense, or in this case, expenditure, you add the ending amount, like the payable in this case, and then you subtract the beginning amount, in this case, the payable again, and that can give you the full current year expenditures. The $720,000 appropriation is merely the legal authorization to spend. It is not an expenditure. Essentially, we're not going to talk about appropriations really in this video, but just so that it makes sense, appropriations are basically the budgeted expenditures, like what they're planning to spend. But it's not the same thing as the actual expenditures. So the $720,000 appropriation doesn't mean that there's an actual $720,000 expenditure. The $28,500 of outstanding encumbrances is also excluded because the goods have not yet been received. An encumbrance represents an expected future expenditure, not an actual expenditure. So again, appropriations kind of like the money set aside or the kind of budgeted version. Encumbrance, again, we're not really talking about those things in this video, but just making sure you understand that appropriation, encumbrance, expenditure, different things. So if you see something that's an appropriation or you see an encumbrance and you don't see anything, really happening to get rid of those, then there's not an expenditure yet. So we learned a little bit more here. Now let's go to the next question. Okay, here we are at question 3. When should the general fund recognize an expenditure and for what amount? So we're learning a little bit maybe about the timing here. At the beginning of the fiscal year, a city council approved a $540,000 appropriation for public works equipment. Again, we see appropriation there. That's a little bit different than an expenditure. During the year, the city issued a purchase order for equipment with an estimated cost of $86,400. The equipment was later received with an actual invoice price of $83,700. So what are they going to recognize an expenditure? Like when are they going to, and for what amount? Now, we haven't really talked about timing very much yet, so if you don't know, that's okay. If you want to give this a guess, maybe pause the video and think through this, and when you're ready, come back, we'll look at the answer together. All right, here we are at the answer. C, when the equipment is received, that's when you recognize it, and it's going to be for $83,700. Let's go through this. An appropriation here, it's good. We're talking about this more in depth, so you can actually understand what an appropriation is. An appropriation is legal authorization to spend. Approving it does not create an expenditure. Issuing the purchase order creates an encumbrance of $86,400, which helps the city track the amount it expects to spend, but is not yet an expenditure. When the equipment is received, the $86,400 encumbrance is reversed, and an expenditure is recognized for the actual invoice price of $83,700. So again, we learned a little bit more about the differences there. Again, appropriation and encumbrance aren't really the focus of this video, but it's good to understand the difference between those and expenditure. Again, appropriation is the legal authorization to spend, like you're allowed to spend that money for a purpose. The encumbrance is putting aside money for like a specific item, like saying $86,400 for this thing that we're going to buy. But once you actually get the thing and once you've actually spent the money, you reverse the encumbrance and then you have the actual amount spent as an expenditure. So let's look at this a little bit more. To reverse the encumbrance, the journal entry would be to debit budgetary fund balance reserved for encumbrances, and then you would credit encumbrances for $86,400. To record the equipment received, you would have expenditures, capital outlay of a debit of $83,700, and you would credit vouchers payable for $83,700. So we're seeing, kind of how expenditures work and how they're related to encumbrances and appropriations. Although again, the focus here is expenditures. So let's go to the next question to focus more on those. Okay, here we are at question 4. What amounts should be reported as an expenditure in the general fund and as an expense in the government-wide financial statements for the current year? Let's go to the top. At the beginning of the fiscal year, a city purchased a new fire engine for $193,600 using general fund resources. The fire engine has an estimated useful life of 8 years and an estimated residual value of $7,600. The city uses straight-line depreciation. So what amount should be reported as an expenditure in the general fund and as an expense in the government-wide financial statements? So this question is there to kind of remind you the differences between modified accrual and accrual, the difference between expenditures and expenses. So think about what you know about normal accounting, normal expenses, and think about what you might know about expenditures. If you don't know very much, that's okay. But again, think about the differences or the things that you do know. Pause the video, think about this, give it your best shot, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is A, the general fund expenditure of $193,600 and the government-wide expense of $23,250. So let's go through this. The general fund reports the entire $193,600 purchase as a capital outlay expenditure. Governmental funds focus on current financial resources and do not report capital assets or depreciation. So that's something really important you need to know, is that when a governmental fund is using the current financial resources measurement focus, which again that would be when you do modified accrual, they're not going to be recognizing depreciation. They're only recognizing the full purchase as an expenditure. So for the general fund, the journal entry would be a debit to expenditures for capital outlay of $193,600 and a credit to cash of $193,600. In the government-wide financial statements, which we have talked about in previous videos, the fire engine is recorded as a capital asset rather than as an immediate expense or expenditure, which it would be for the general fund. The city then recognizes depreciation expense over its useful life. And you've seen this probably a whole bunch of times in your career or in maybe the other CPA exams. Pretty straightforward to do normal depreciation. You take the cost of the fire engine, subtract the estimated residual value. That's the actual depreciable amount right there, which ends up being $186,000. You divide that by the 8-year useful life, and that gives you an annual depreciation expense of $23,250. So for the government-wide entries, they would have capital assets, which was the fire engine, so like the actual asset on their books, and that would be a debit of $193,600, and then they would credit cash $193,600. And then later, there would be the depreciation expense, which would be $23,250 as a debit, and accumulated depreciation as $23,250 as a credit. So again, that question was there to really just show you the difference between the modified accrual approach, which uses the current financial resources measurement focus, compared to accrual. Because under the modified accrual approach, they're having the whole thing as an expenditure. Compared to under the accrual approach, they purchase the whole thing and it's on the books as an asset, and then they depreciate it. So there is that difference there. So I wanted to make sure that was clear when it comes to expenditures. Now let's go to the next question. All right, here we are at question 5. What amount of expense should the city report for its governmental activities in the government-wide financial statements? Let's go to the top. A city reported total governmental fund expenditures of $2,184,000 for the current year. This amount included the following: $312,000 of capital outlay expenditures and bond principal payments of $146,000. For the same year, depreciation expense on governmental capital assets was $87,000. Government-wide interest expense exceeded the related governmental fund interest expenditure by $12,500. Government-wide compensated absences expense also exceeded the related governmental fund expenditure by $28,000. So what amount of expense are they going to be recording in the governmental activities in the government-wide financial statements? Now, this honestly is a completely new question, so no worries if you don't really know how to do this, but we're trying to show how, again, the expenditures are different from expenses so that you can kind of do the calculations so that you know how to get to the correct expenses or the correct expenditures if you have the other amount. So think through this if you want, but if not, again, that's okay. We are learning and we haven't really talked about this kind of question before. So let's go ahead and go to the explanation. Okay, here we are. The answer is D, $1,853,500. Governmental fund expenditures must be adjusted to reflect the economic resources focus, which again, under the accrual method, it's economic resources. Under the modified accrual method, it's the current financial resources. So again, the expenditures have to be adjusted to reflect that economic resources focus and accrual basis used in the government-wide financial statements. So we take the governmental fund expenditures, $2,184,000. We subtract the capital outlay expenditures for $312,000. we add the depreciation expense because it wasn't there under the normal expenditures. We subtract the bond principal payments. We add additional interest expense because that was the amount that was greater. And we add the additional compensated absences expense, which again, that amount was greater than the expenditure that was in the governmental fund expenditures. So it ends up being the government-wide expenses of $1,853,500. So let's kind of walk through that. Capital outlays are removed because the assets are capitalized under accrual accounting, but depreciation expense is added. So, we have to take away that whole expenditure because we're not counting all of it as an expense, but we do add back the depreciation expense. Bond principal payments are removed because they reduce a liability rather than create an expense. The additional interest and compensated absences expenses are added because accrual accounting recognizes these costs as they are incurred, even when they do not yet require the use of current financial resources. So again, just kind of seeing the differences there between expenditures and expenses. And this actually does kind of relate to the other blueprint topic that's in this area, in this section, which is about calculating the expenses for government-wide financial statements. We're not going to do a video about that right now, but again, I kind of threw this in there so you could see the differences, so we could kind of still learn a little bit about the next blueprint task. Now, we learned a lot in these 5 questions. Before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics, as a reminder, is as you're going through the questions in your review course to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or maybe even 4 questions trying to teach you about how expenditures are treated or what counts as an expenditure or different things like that. Again, those are the things that you're seeing consistently, so you write them out in your own words as the pillar topics so that you know what is important from the questions that you're learning from. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's go through this. Again, this is basically a summary, written in your own words of the key things that you learned. So let's go through this. Expenditures are decreases in a governmental fund's net financial resources other than interfund transfers. So remember, interfund transfers don't count as expenditures. They commonly include salaries, services, equipment purchases, short-term lease payments, and debt service payments. Expenditures for ordinary goods and services are, again, generally recognized, and they are generally recognized when the related fund liability is incurred. Current year expenditures can be calculated as cash paid plus ending accounts payable minus beginning accounts payable. Again, that was just kind of a simple equation there that we learned. Next, let's move on. An appropriation is legal authorization to spend, while an encumbrance records an expected future expenditure for an outstanding commitment. The actual expenditure is recognized when the goods or services are received. Next, governmental funds report capital asset purchases as capital outlay expenditures. Government-wide financial statements capitalize the assets and recognize depreciation expense over their useful lives, much more similar to normal accounting. Government-wide expenses exclude capital outlays and debt principal payments, but include depreciation and costs arising from long-term liabilities as they are incurred. These adjustments convert the governmental fund's current financial resources focus to the government-wide statement's economic resources focus. So we learned a lot in this video. Again, that was kind of a summary of the things that we learned about expenditures. We learned a little bit about expenses for the government-wide financial statements as well. We learned a little bit about appropriations and encumbrances. So we learned a lot in the first 5 questions. Now, as a reminder, that is the end of the YouTube version of this video. But if you become a part of SuperfastCPA, currently if you become a part of the Pro course, and eventually we're going to move that to if you purchase the supplemental study materials for a specific part of the exam. At any rate, if you become a part of SuperfastCPA in one of those ways, you will get access to the full 10-question versions of these videos so that you can get a little bit more help and a little bit more understanding. So if you liked this, make sure you check that out. One of the easiest ways to learn more about SuperfastCPA is to go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And again, from there, that's a great path to learning about the things that I have already mentioned. Now, with that, that is the end of the YouTube video. Thank you for watching or listening. If you liked it, make sure to like it and leave a comment, again, in the YouTube video. And with that, I will see you in the next one.